Welcome to No Free Lunch, Africa's freshest business podcast. With me, your host, Greg Stewart. And remember, there's no free lunch in business. This morning, I'm really thrilled to have Thomas Brennan, the CEO of Franc, the investment app. And Thomas, welcome.
Hi, Greg. Yeah, thanks very much for inviting me.
Thomas, just quickly a little bit of background about Franc and about yourself. We'll be frank about it. You had an interesting career. You've been with Discovery. And prior to that, you were in the education field. You were at MIT. You were at Oxford University doing a PhD. But just give us a bit of a background and how Franc started.
Sure. And the number of times I get called Frank by proxy, I suppose I describe myself as an engineer with an ambition to have a positive impact. Very early on, I realized that telecommunications wasn't for me. I was fortunate enough to get the Rhodes Scholarship, which sent me to Oxford. So I actually did my doctorate in machine learning and signal processing. It was actually in a health application. And that was the sort of core focus of my career in the first, sort of 10 years. I then returned to South Africa in 2015 and started working at Discovery Health in their product development team. They called it the R&D lab. So it sat at a group level and cut across all of the business development units, insurance, kind of investments, both, obviously long-term and short-term insurance. And it was actually while I was there surrounded by actuaries, to be honest, I just saw an opportunity in the financial services space. It's not only as a sort of, late entrant into the job market, having a financial advisor come and try and sell me things. And I think, I sent back a spreadsheet actually with my interpretation of what he was trying to sell. And he never responded to my email, which I suppose was the first warning sign for me to be like, okay, what's going on here? And then the more you get into it, you realize that, for far too long, I think people have been largely excluded from the world of building wealth. And that's either because they can't afford the minimums to access the platforms, or they don't have the knowledge in order to make a good decision. And I think the statistics are only 10% of South Africans have actually seen a financial advisor. So, and they're obviously focusing on the top 10% in terms of income. So the vast majority of people just don't have the means, the knowledge to be able to start building wealth. And so that's fundamentally the problem that Franc is trying to solve. We want to make building wealth as simple as possible and accessible, as easy as sending a text message, fundamentally. It's a mobile application. You can access it 24/7 and make good decisions about what you want to do with your money.
The thing for me around investing, and I think it stems back to, upbringing in South Africa today. I think there are so few people that are provided with any kind of financial knowledge and any kind of financial insights. And I think there's a massive knowledge gap it's a massive chasm. It's not only in South Africa, but particularly in South Africa. My experience shows that people are just unaware of these things and unaware of the fact of the advantages of building wealth, and that you can start small. I think that's one of the big things is people often will look at it and go, well, I don't have 50,000 Rand. I don't have 100,000 Rand. I don't have 20,000 Rand to invest. So I can't invest. And that leads to longer term disadvantages. And I think for people starting out working, start when you're young, those kind of things, even if it's a small thing, it grows, the compound interest, all those factors. That knowledge gap is definitely an issue.
Yeah. And it was a very personal experience because my mother was a maths teacher. My dad was a pilot. Like I definitely didn't have, that money education. And so it was only, as mentioned, coming in later career and coming in obviously with, PhD and I suppose a well-developed analytical mind. And I think approaching finance or wealth building from an engineering perspective, where you tend to think about it from the first principles approach, right? You can get very complicated, but actually you can do a hell of a lot by taking a simple approach. And I'm not the first one to say this, Warren Buffett and John Bogle, the guys who are world-renowned, for their kind of investment expertise, advocate for the vast majority of people just to keep it simple. A bit of kind of bonds, money markets, a bit of index tracking ETFs. Don't try and be smart. Don't try and beat the market, own the market. That's what they go on and on about. And so as I came to this understanding, I looked around me and you see that nobody else is really preaching that story. And that's what we wanted to try and solve, get that message out there that no, actually, it's not complicated. No, you don't need a lot of money to start investing. You can take your 10 rand or your, small change at the end of the month and actually start a habit. And I think that's where the real challenge is actually building a habit around not only saving, but putting that money into something that can actually generate, income or grow from a capital perspective. And I think the moment you have that moment of truth and you realize like, wow, why spend when actually that money can be worth 10 times as more in whatever, 10 years times.
And one of the sad things that you've highlighted in some of your posts is the fact that in South Africa, we've got a massive amount of money that gets spent. And it's not unique to South Africa, but a massive amount of money spent on things like gambling, and if you think about it, I think the number that you mentioned in one of your posts was something like I think it was 1.4 billion, or was it trillion? I can't remember the number.
1.1 trillion is the figure from last year, according to the National Gambling Board. And it's an astounding figure. I mean, it's mind blowing. But for me, I think it's the intersection of a perfect storm to some degree. Like these applications, they're making it fun. They're kind of using all of the tools that social media have kind of picked on how to kind of attract attention. They're capitalizing, I think, on a low level of financial literacy. So people think that they can win, whereas the odds are actually that there's a negative expected return. You're going to lose money over the long term. And I think there's a compounding factor in social media where people only share their winnings, if you will, not sharing all of the times that they lose. And so as an individual, you get this perception that everyone around me is winning. There's a desperation or an ambition to try and do something, like if I won, it would change my month, or to change my, my ability to support my family, whatever the case may be. And so people go for it. And then like there's the dark underlayer, which needs to be spoken about, is that gambling is an addictive practice, right? You get into this dopamine reward kind of cycle, right? Where you keep on wanting to get more and more and more. And, the trend is not good. And so like, frankly, they're the monster in the room for me. I'm trying to encourage people to do something more constructive with their money. We're trying to use gamification as well on the Franc app, so we've got a save to win on our emergency savings. So not only can you build up some emergency savings, but every deposit you make, you can play a little game which will magnify the deposit amount. And that effectively is, in every rand is an entry into a draw where you can win up to 10,000 rand at the end of the month. So rather than gambling where your chances of winning are very low, rather earn interest in emergency savings, and there's a chance of, winning some money on the side.
So the whole thing about, you're talking about the gamification and that sort of thing, the loss of income, the interesting fact for me was that there's something like 12% of the national household income is spent on gambling.
Yeah, I can well believe that. I mean, it's an extraordinary figure. But I mean, the other thing which is important to note is actually, the proportion of household income that is going towards servicing debt. And we spoke a little bit earlier about, the need for emergency savings. The vast majority of people, when they have an emergency, have to borrow more debt, whether that's luckily friends and family or the worst case, a loan shark. But that's an extraordinary debt burden. And obviously, as you know, like a lot of people are flying so close to the edge that there doesn't seem to be a lot of wiggle room, right? You're kind of getting knocks from like one shock to another and never really kind of feel like you get your head above water. So obviously the first priority is getting rid of that debt or trying to tackle it head on. And then second, or maybe in parallel, start, as much as you can, getting some of your, your spare change, put it in a jar, start saving and putting that into a money market fund where you can use the Franc app, because not only do we give you 5% interest through the Allan Gray Money Market Fund, but you can access that money the same day. So we've built the capability of a sort of a same day withdrawal. And I think those are the two key features. You need access to your money. So don't put it in a fixed deposit where you're not going to be able to access it without paying a lot of penalties. And don't leave it in the bank account because you're not going to be earning any interest on that money.
I had personal experience of both people running into that debt trap when I was with a media group, and I had staff that were running up crazy bills at the canteen, and then deducting that off their salary, and then running off to get a loan from these independent or private loan people that charge exorbitant interest, and that just runs into a debt trap all the time. And fortunately, when I was much younger, I had a bank manager who was quite exceptional, and called me in the one day and sat me down and said, I can see you earning a reasonable salary, but you're not managing your finances very well. And I'm going to ask you to give me your credit card back. So I went, what do you mean? She said, give me your credit card. So I gave him my credit card. She said, okay, I put in this in an envelope and I'm keeping it in my drawer, and we're going to work out a budget for you. And we're going to actually sit down and work out a budget, and you're going to pay the credit card off and your overdraft off. And if you stick to the plan, in 6 to 8 months, you should be completely free of that debt, and you would have learned how to manage your finances. And I did that, and it was such a valuable lesson for me, and that was a lesson that I could then pass on to some of my staff at a later stage, and it made a big difference in people's lives, just for them to realize I don't have to spend extra money on interest. I should be earning interest. And again, one of the learnings to start early, start young, get into the habit of, even if it's a small amount, it doesn't have to be a big amount, just start and let it grow and see the effect of that compound interest and so on, building up your wealth. And later on, you can get more sophisticated in terms of your investments and so on. But I think there's valuable lessons there, and it's nice to see that financial entity. I don't know if you call yourself a fintech, but you're a fin app, shall we say? That you're approaching money from a sensible point of view, and I think that's just lacking in the market today.
Yeah, 100%. And I think the important thing about building up some emergency savings is it gives you the option of choice. Too many people, unfortunately, feel that they don't have a choice. And I think being able to think long term to some degree is a privilege that, many people don't enjoy. So, how can you talk to somebody about taking on board investment risk when they have no buffer? Like, one financial shock will tip them over the edge. You can't have that conversation. And we've learned that, I suppose, the hard way. So trying to get people to realize that the starting point is clearing your debt, getting started and building up some buffer. And then once you've kind of got those two things under control, then, okay, let's lift up. Let's look forward. What are your dreams? Do you want to get married? Do you want to buy a house? Put something away for retirement. Then you can start having that conversation. And obviously, appropriately within that conversation is, okay, let's talk a little bit about investment risk and what it would mean for you.
Yeah, and I think that things change in the marketplace pretty rapidly. I know that Franc also offers Bitcoin investments and so on. We've seen big shifts in terms of property values. Property values aren't necessarily going up anymore. In the past, there was a fairly good way to invest your money in a property because you were sure to get a return on it. That's not necessarily the case anymore. So there's a lot of things that one has to learn and shift and change, and to have valuable advice available to you to actually shift you in a direction where okay, look, I'm going to get 6 or 7% return, but it's better than getting nothing or a minus return, because you can get into buying stocks and shares. And a lot of people also make mistakes there where they're buying into shares because their golfing buddy or the lady at the tuck shop said that her brother was involved in an investment or a company or something like that. And unfortunately, these things are volatile, and in the market, they are volatile. So it's also heading away from the volatility, building up buffers, building up your investment value, and then perhaps being able to venture into more risk or higher risk areas of investment.
Yeah. I mean, I think, we want to be, as a business, the key to knowledge and wealth. And I think it starts with knowledge. You need to know why investing is important. You need to beat inflation. Otherwise your savings are losing money, losing value. And then once you and it's not a lot of knowledge. I mean, I wish it was part of the school curriculum, because it really should be. But once you've got that sort of base knowledge under your belt to know, like, actually, I have to do something with my savings, then it's a question like, okay, what? And then obviously there's a pathway, and we can help clients, we help our investors think about what that pathway is for them. And obviously it depends on where you are in your life and your career, your journey. But wherever you are, it's clear that you started emergency savings, move on to, something for retirement, and then look at discretionary wealth and diversification. But it's interesting to think about the knowledge and the pathway actually kind of coming in incremental steps. It doesn't have to be the sort of like massive data dump where you need to understand, the intricacies of all investing practices, which I think is where the market has failed, and obviously we spoke about it very early, but that information asymmetry has arguably been capitalized upon by people that have that knowledge. They're like, no, trust me, I'll look after your money. And then obviously I'm charging a little fat fee on the side, where we take a different approach. Actually, I want you to control your money, and I'm very willing to help you as much as we can, but you are effectively the custodian, if you will, the owner of the decisions in terms of where your money grows. And it's not like, we are recommending you kind of enter into Ponzi scheme X, We're partnering with Alan Gray, Satrix, Signia, well-respected companies who do the job of asset management very, very well.
Yeah. And just in terms of your app, are you registered as a financial service provider? How does that operate?
Yeah, so we are a licensed FSP, and we are South Africa's, I suppose, only digital wealth advisor. So our license gives us authority to provide automated advice. So through the app, you can go in, there's a sort of a needs assessment, which is sort of a standard sort of industry practice. And then we recommend for you what that pathway is. And then obviously associated with that pathway are going to be certain products, an emergency savings, as said, powered by sort of Alan Gray Money Market Fund, tax-free savings account, an RA, discretionary wealth. All of the products that we recommend are very much keeping it simple. It's not a marketplace. We sort of think, actually, if you're going to invest in the local stock market, Satrix 40 is the lowest cost index. The Signia S&P 500 is the lowest cost index for accessing the S&P 500. And people themselves, we get customers from Easy Equities all the time who just go there, and you're overloaded with making a decision out of 500 different products. And people are like, I don't know what to buy. I don't know where to start. And that's where Franc comes in. We're that advisory layer. We can really help people make a good decision for building wealth.
Well, I think that it's overdue time that we've had something like this in the marketplace. And I know you've been around for a couple of years now. I think Franc launched in about 2018, if I'm not mistaken. So you've been around for quite a while. And I think it's the kind of easy access opportunity for people to save wisely that certainly has been lacking in the marketplace. Just out of a point of interest, how many app users do you have at the moment, or is that a confidential thing?
No, we're growing about sort of 5 to 10% month on month. We have about 26,000 funded accounts at the moment. So yeah, we've built up that critical mass. It has been tough going, largely because of that sort of distrust and that knowledge gap. People being very wary, but now we see a lot of referrals. People are sort of hearing about us from other friends, from other users. And so that we're kind of, passing hopefully that sort of knee in the curve. But I think we knew it would take time to build trust and build a brand. And that's fundamentally, where we are and what we're doing.
Wonderful. I want to thank you for your time. I want to thank you for your sharing your insights with us. And I hope to have the opportunity to chat with you again and be frank about saving. And let's hope that you grow from strength to strength. Thank you very much,
Thanks,
Thomas.
Greg. It's been a lively chat, and I really have enjoyed it. So thanks very much.